It started as a completely ordinary weekend, a standard suburban backyard, a sunny afternoon, and an 11-year-old's birthday party. But hiding in that yard were two serious hazards. First, the ground was torn up with deep dirt ruts left over from recent retaining wall construction. Second, the home had an above-ground pool with a pump connected directly to a water main, housed inside a sharp, exposed metal box. The kids eventually started a game of football. The birthday girl's father decided to play quarterback, throwing the ball deep into the yard. A 10-year-old guest, focused entirely on the catch, sprinted across the grass and hit one of those deep construction ruts. She tripped, went airborne, and crashed directly into the metal pool pump housing. The impact shattered her collarbone and severely sprained her knee and ankle. At the same time, the metal box broke, snapping the water intake. The yard immediately began flooding with water from the city main. A chaotic backyard mishap like this feels like a string of bad luck. In reality, it is a ticking time bomb for severe financial liability. Initially, the injured girl's parents decided to handle the situation quietly. Acting as good friends and decent neighbors, they planned to absorb the massive medical costs themselves, using their own health insurance. Then, the mail arrived. The homeowners sent the injured girl's parents a formal, certified letter. It was an aggressive demand requiring them to pay for the broken pump, landscaping damage, and the inconvenience of lacking water for 2 days. The parents immediately dropped the friendly neighbor routine. They picked up the phone, called the homeowner's property insurance, and submitted the massive stack of medical bills. Shortly after, the homeowners received notice that their policy was being permanently canceled due to excessive claims. This raises a fascinating question. Was calling the homeowner's policy a petty act of revenge? Or did the homeowner simply fail to understand the unstoppable legal machinery they accidentally triggered? To understand what happened to the homeowners, we have to strip away the emotional outrage and evaluate their actions through a strict, objective legal lens. Leading up to the accident, the property owner made 3 specific choices. They left heavy pool machinery completely unfenced, they maintained deep construction ruts in an area where children were allowed to play, and an adult actively directed a child right into those exact hazards by throwing a football over them. Under the law, this falls under premises liability, the legal principle that a property owner is responsible for maintaining a safe environment for their visitors. Because of these 3 combined factors, the legal burden shifts entirely. The homeowner is 100% responsible for the injuries. That certified letter represented a massive miscalculation of legal standing, built on the assumption that they could keep their negligence hidden. This diagram illustrates how health insurance companies operate like financial detectives. When a hospital treats a major physical trauma, they generate a specific billing code that gets sent straight to a massive insurance database server. Processing a code for a shattered collarbone automatically triggers an internal investigation. The insurance company knows this type of injury rarely happens randomly in a living room, so their system demands to know the exact address where the accident occurred. The victim's parents would eventually receive a formal inquiry from their health insurance. This presents an impossible choice: either lie on official documentation and commit felony perjury, or tell the truth and hand over the homeowner's address. Disclosing the location activates a mechanism called subrogation. Subrogation is a legal right that allows the health insurer to step into the patient's shoes and directly sue the responsible party to recover their medical costs. Because of subrogation, the health insurance company was structurally guaranteed to hunt down the homeowner's insurance to pay for those medical bills. The parents' personal feelings about the friendship had zero power to stop it. The phone call to the property insurer didn't invent a retaliation campaign. It simply acted as a manual override for an automated corporate system that was already locked onto the homeowner. The homeowner eventually faced a penalty far steeper than the medical bills. Their insurance provider completely canceled their policy. The insurance investigation triggered this cancellation after uncovering the homeowner's shoddy, unpermitted DIY fix to the pool pump from the previous summer. Insurance companies use every damage claim as an opportunity to audit a property for undisclosed systemic hazards that make the home too risky to cover. By trying to extort their neighbors over a broken pump, the homeowners inadvertently invited auditors onto their property and exposed their own uninsurable negligence. The homeowner attempted a fatally flawed strategy. They demanded informal, neighborly grace for their own dangerous yard, while simultaneously weaponizing a formal, certified legal letter against their guests. You cannot mix these two worlds. The moment you introduce formal legal threats, all social protection dissolves, and the door locks tight. The relationship is replaced entirely by the brutal, mechanical math of liability. Never accept financial liability for someone else's negligence, because once the insurance machine wakes up, it operates purely on facts, not friendship.